Hello, hello. Can you hear me now?
Yeah, there you are.
Yeah, I had to clear a load of stuff off my machine, and all the cookies are gone, and all the settings have gone, and need all that on a Monday. Good morning, everybody. I must have been speaking to myself then. Oh, what a week last week, eh?
Yeah, it was one. I mean, especially the end. Yeah, it was quite spectacular.
Yeah, one pretty much blew my mind that all that data last week, which we'll go over obviously in a moment. But you know, a complete change around in markets really, and you know, that's what can happen. 1 minute you're walking one way, and the next minute you get a slap around the face and you're walking the other way. But we shall get into all the price moves and where we're at in a moment. No Stell today. He's funny enough running around London. Should be meeting up with him tomorrow, all being well. Again, just in case you weren't aware, we're having a little drink up in town. So anyone's about in London tomorrow afternoon, then please do feel free to join us. We're going to a place called the Jam Pot, or the Jamaica Wine House in Cornhill, from 3 o'clock in the afternoon. So anyone about, as I say, please feel free to join us, share a few beers with you. Right, let's get stuck into it then. Fun and games from Japan, because the Nikkei reported that the Deputy Governor Amamiya might be up for the role. Rumours around that helped dollar yen open up quite strongly into 132, and we're still mooching around that level at the moment. Since then, there's been a whole host of denials and differences of opinion and whatnot. Suzuki came out first of all saying that they haven't heard anything about the Bank of Japan nomination yet, but then came out and said that he's actually been out the loop on the nominations. Amamiya himself did not comment to reporters about being put in the frame. And then we had one of the Deputy Chief Cabinet Secretary, Isozaki, saying that there's no truth to report that the Deputy Governor Amamiya has been sounded out for the next BOJ governor. Then the ruling party Secretary General Motegi said there's no truth to media reports that the government is at the final stage in the new BOJ governor nomination. Then he said the BOJ nomination decision is currently in the final stage. So there's no rumour to the truth it's at the final stage, but it's in the final stage. Work that one out. And all the while, Bank of Japan's Kuroda was in Parliament, and he said he will continue with appropriate monetary policy. No comments thereafter on anything to do with his nomination successor. What do you make of it? Okay, no smoke without fire, or are we just throwing darts in the air?
No, I think no smoke without fire, really. Now that Nakaso is taking up the other job, Amamiya becomes the most likely candidate, I'd say. So yeah, I really think he's got a good chance of getting it. But of course, this is Japan. Everything can happen until the last moment. And that Suzuki wasn't aware. It is possible that being head of the MOF, he might not be involved in the process if they want to just discuss things between the Japanese government and the Bank of Japan, really.
Surely he'd be front and center, wouldn't he? Be the Minister of Finance.
Well, yeah, one would think so. But then again, it's Japan, and Kishida. Seemingly, if one looks through a little bit of whatever the officialdom should or shouldn't do, he is trying to keep a pretty firm hand on things, on any decisions. So it may have been that he went around Suzuki, and I don't know. I haven't read everything about it, but. Just trying to figure out who's talking to who there, maybe a bit of a puzzle in itself. So,
yeah,
but anyway, I think everything points now at least the decision for the nominees being done next week. So let's assume that Amami has got like 55 or 60% chance, and then 40% divided by the rest of the candidates, probably. So that's what the market is banking on now, and that needs a bit of repricing. If you want, I can talk about it now, or we can talk about it later. What it may mean.
Yeah, we'll get through the rest of it,
Yeah.
and then we can take a look at the price moves there a bit after. But Amamia was always really pretty much a favourite in the market's eyes, wasn't he? So
yeah, well, I mean, the market got a bit spooked, yeah, when Nakaso and one other guy, I don't recall his name, were named as possible candidates because they were pretty much critics of the whole YCC ultra loose policy and everything. But then when Nakaso took up his job, his other thing, then Amamiya, yeah, we have to know that Amamiya is one of the architects of Kuroda's policy. So that's why the yen reacted so fiercely. And I also think that he will be more mindful of government finances than a guy like Nakaso or one or two of the other candidates, maybe. So the fact that Amamiya will come on doesn't mean that Japan is going to remain stuck in the policy that they have now. I still think we are in a gradual move out of the strongest measures against the monetary easing, but it's all going to be a lot slower than if a guy like Nakaso would be at the helm.
Yeah, exactly. Well, let's move on quickly then. Australia, they had some quarterly retail sales out, excluding inflation for Q4, came in at minus 0.2%, slightly better than the minus 0.5% expected. We obviously have the RBA coming up this week. Expectations for a 25 pip hike on the board there. Doubt that retail sales number is going to influence anything. But trade ministers of Australia and China have been conversing, and Australia says that they're discussing a pathway to a full resumption of trade. And from the Chinese side, they said that the trade and commerce ministers conducted pragmatic and candid exchanges. So things going on there. No balloons being shot down over Australia, apparently. On the rest of the headline front, I mean, it's really been a flood of ECB central bankers all creeping out the woodwork after the meeting last week. So I won't go over that. They're all pushing the same old cases, reading off the Lagarde script pretty much about what's to come, at least for the next meeting. 50 BP is expected still there. So we'll crack into the data that we got last week, which for pretty much Goldilocks numbers for the US. Let's get the right numbers up. Come on, you. Where are we? Yeah. So obviously we all kicked off with the non-farm payrolls coming in with that mind-blowing 517,000. I'm still not sure about that number because we did all get this method changes and all the revisions and everything else thrown in the mix for that one. But it really was a gangbusters number. And I haven't yet seen anything to suggest it wasn't good. And the rest of it was good as well. Unemployment rate dropping back or dropping down to 3.4%, even as the participation rate rose. So that's a double good number when the participation rate goes up as well. If you had to pick the bones out of it, wages, they beat expectations, but still down a bit on last month at 4.4%. But still in the pot, and if inflation is coming down and wages stay elevated, then the gap is going to close between the inflation adjustment, if you like. So pretty good numbers. And then later on, we got the ISM. First of all, we got the S&P Global number, which showed still in contraction, although a slight improvement on the flash number. And then we got, as I say, the ISM, which completely blew it away. 55.2 versus 50.4 expected. Again, the numbers within it, inflation pressures from the prices paid just dipping a tiny bit. Employment was up, new orders, massive jump there. Look at that contraction, 45.2 to 60.4. These are numbers, the likes of which we don't often see. And what it did, it completely flipped the dollar around. You know, as we know, all last week we were pushing highs in dollar pairs like Aussie dollar, Euro dollar, cable, you name it, pushing the highs, making breaks, looking like we were breaking higher. And since then, it's been a complete 180. Dollar yen, the case in point, you know, there we go from Friday, wallop, big move up to 131, and that's continued on with the MME news today, and still looking pretty above this zone. We got up to this zone, that was my next resistance zone I was looking at. As I said this morning, I don't know if it's by design or by luck or by what, but we couldn't get above it. Friday, closed below it, opened up Sunday above it, and finding it as support. So on the text, at least, you've got your level you need to understand is your support level back through there, and we maybe go back in the box. But while we hold it, every chance of a push up towards the next area is 133, maybe even 134. And just go on to another chart quickly. And, you know, this is the range I've been looking at to see if we play within it. If something's going to change, this is the range we need to break out of. You know, we've now tried the downside, 128 holding last week, head of the 127s. Now we need to see where the top sides of the range is going to come in. Are we going to see a middling range, 133, 128? And then we've got the upside at 134. Okay, that data, it's completely changed the complexion of everything, really, isn't it? Absolutely. You know, we're talking soft landings, and, you know, the dollar couldn't find a bid anywhere, and now, you know, yields, dollar, the lot, it's all done a flip around.
Yeah, we've been talking about that labor market domino, right? And we were expecting it to show at least some weakness on the revisions and things, and we've got absolutely nothing on to show us any weakness at all. And I know what Mike is saying, it's going to be reversed next month, but then if it's not reversed next month, Mike, where's the dollar going to be? That's the thing, you know. And the combination of those numbers did, and the central banks, it just had the market to rethink whatever it was thinking before. That is, slow down in the hikes and a reversal second part of the year, probably. But this now, that just with such kind of numbers, forget it. Because and if you then take the ISM, where we said like, oh, it's starting to turn, it's starting to look sour. The employment index was going down, new orders were bad, the inflation data started to come down. And now all of a sudden, December looks like to be the outlier where it was bad, and now we are back on the better train. So as we're seeing, especially in the bond market, and now finally the equity market is starting to follow. This market needs to reprice a few things, and so until at least the next CPI print, I'm expecting this kind of repricing to continue. So I'm not saying US 10s or whatever are going to rally to 4%, and I'm not saying the US 2 years is going to go up to 4 3/4 and align with where the Fed funds are at the top end of the range or so. But we need this market needs to reprice a few things, and so we will be, in my opinion, in that process, and so will be the dollar. And it may not be a straight line, it may not be a rocket under the dollar, but I reckon what we're seeing this morning could be the pattern of a good part of the week. And I'll come to Powell in a sec. You're going to see a bit of waves here and there, and I also think that because we can't forget, we are not the only guys in the market. We don't decide upon rates. We are at best, retail trading is at best, I've seen numbers out of Australia there, at best 10% of the market in the wildest in the wildest markets. Perhaps in equities a bit more with all those options and so. But if you look at the FX market, we are still not a big part. But stuff like model funds, for instance, if you have a reversal like that in the dollar, they will get dollar buying signals perhaps every hour of the day, and then you will see a market quiet down and sit there, and then the next hour the dollar advances another like 0.1 or 0.15 or 2% or so, and I reckon that is what we are going to see for the time being. And I'll show a few charts later on the yields, but they are really telling, and we are at important levels, whether it be on the US 10s or the longer end or even the short end on the twos. We are at important levels, and if the market needs to reprice more, needs to price out rate cuts, there could be another 0.25% waiting there over the course of the week. What I think about Powell tomorrow, just front running the events a little bit, he must be laughing his brains out right now. Even though they weren't fighting back a lot against those rate cut pricing and financial conditions easing, he said that it's not normal. And I don't know if they knew the numbers already about of the NFPs or the ISM or so, but yeah, he must be now sitting there and saying, like, in his speech tomorrow, he's probably going to tell the market, you were wrong. And I don't think that he's going to fight against any of those numbers. It would be a surprise if he brushes these off the table. They love to have a good economy, good ISM, good labor market, and then they can just continue to tighten the reins. Yeah.
Yeah, I think at the least he's going to say, you know, we're doing the job, and he may show some surprise over the numbers, but he's going to say that they're good numbers, but he's still going to throw in the caveat that, you know, they still are pushing, and some economic weakness may still follow through. But it was a Goldilocks number, and Richard's just put in that about the strike, people coming back from strikes, and yeah, I get that, but we didn't see such a negative NFP number when they went on strike. You know, there's always two sides to that coin. If, you know, let's say the real number was around 220, 230 as it's been running for the last few months. So you're looking at, you know, 250 people on strike, let's say. We didn't see any negative numbers or zero numbers if you take those people off when they went on strike. So I'm not overly sure that's potentially there in numbers as well. But who knows? We'll see if it flushes out next month, if it goes into reverse, then we know it's a skew. Until then, you've got to understand the market has gone from rally selling the dollar to dip buying the dollar. And sometimes in our retail minds, we see a big move like that, and our first instinct is, oh, right, sell it, because that's not what's been happening for the last few weeks. But you know, you've got to know when the market has changed tack, and as I say, we've probably gone from rally selling the dollar to dip buying. So keep an eye on that. And you know, as I mentioned last week, it was going to be important where we finished the week in all these pairs. You know, were we going to finish above 1900, above 109.40, 109.00 in euro dollar? No, we're finishing well below. You know, 108. It's, you know, where the market closes is very important. This has completely changed the complexion of the dollar picture right now, and you've got to fight the urge just to fight it because you've seen a big move in one direction. If you're going to fight it, pick your battlegrounds, pick your levels. You know, we've got one pretty much here in euro dollar around this 107.60 area. You know, maybe a bit of a line in the sand to a drop to 107. But the damage has already been done. So if we're going to get back up to these highs, we've got to now get back through all these levels. And you can bet your bottom dollar they're all going to be holding resistance now and building, because those rally sellers in these pairs are going to be lining themselves up. So all the hard work has got to be done again. So if you think you're buying it here and going to see 109 tomorrow, well, I don't fancy your chances. Never say never, of course, but you know, the hard work will have to be done all over again, all the way back up, if we are to reverse this. Conversely, you know, we've tried the upside. Now it's maybe time to try some of the downside areas. You know, can we have a look down at the 106s, maybe even down to the 105s? You know, I wouldn't rule it out at this moment. We get more better data from the US, get a hawkish Powell speaking tomorrow, you know, reaffirming their stance, maybe even indicating there's more work to do on rates because the economy is now looking a bit stronger, and maybe we're heading to 105. But there is still a thing at the back of my mind saying that this is just two pieces of data we've seen when the rest has not been all that great. It could be an outlier at the beginning of the year. What do we need? We need a bit more evidence to come. So just looking around some of the other pairs, Aussie dollar, I think my best trade last week was halving my long exposure, my long-term longs halved at 70.50, just because I thought we were getting a little bit toppy up here. The price action was just twanging in the back of my mind, getting a bit of caution rallied that maybe we are struggling at the top side. So here we are down below 69 at the moment, and a bit of a level, a bit of a line in the sand here for the Aussie dollar. You know, we had, remember this area that we played with on the way up, couldn't get through it, several attempts to try it, and then we got the break up, then it held, and it was pretty much the springboard for a run to the high. Well, now we're here close and testing it again. So if it holds as support, then maybe this looks like a bit of a trend refresh, and then maybe we move back up again. But if we get under this zone, 68.70, we could be heading further down. And just looking at the fibs, you know, I've drawn this on this morning, the fib of the October move where we got that big low, comes in 67.81. So that's your first test of the real test of the trend if we get down to that fib level. Until then, the trend still remains in play for this one. Kay, do you want to have a little look around, as you said?
Yeah, sure, mate. Let's have a look first at where am I? There we go. Can you see my screen?
Yep, got it, mate. And just Richard, no problem. Richard, I hope you didn't think I was just you know, knocking your comment into the wind or anything like that. I was just I did notice that strike stuff, and as I say, it just struck me that we didn't hear the difference on the other side when they first went on strike. So thank you for the info as always.
Right, US 10s. We really need to look at the bond market and at the yields market this week, especially, and then with Powell as well, because as I said, this market needs to reprice a few things. We've already started. We've had this big jump from Thursday, Friday, in post Federal Reserve, and then post all the rest of the central banks, and then those data. This is what repricing looks like, and you're doing like 20-25 BPs in one session on the US 10-year. I can't even imagine how much money that represents for some, because it's really the biggest market out there. But this is big. This is a big move, and if we start to break above this 360, 361 in the US 10s, get a confirmation through 365, why not? You know, there could be another 20-25 BPs, and in which case, if that materializes, because I doubt Powell will fight against this move, because that's going to tighten financial conditions a bit. It's the US real interest rates are also ticking up, so that plays in favor of what he wants to do or they want to do, and I wouldn't really rule out that we are going to have a look back at this 385, 390 zone at some stage. But so keep it very, very closely monitored, this one, and then the other one is the 2-year. We had built this little downward channel when the market was repricing stuff. This one is still a mistake. I don't think that this was a real rate, so that's why my chart stops here. And we are at the top end here at 440. We are right on it, and that's another one. And then you're going to find it, if that breaks, then you're going to find it back in the differentials. Look at what happened in the interest rate differentials between the euro and the dollar in the short term. You know, I was telling about this resistance here last week, and that's when we printed the high on well, a little later actually. We printed the high on the euro dollar at the start of the Asian session. Since then, the differential has been widening out again. This was pretty much the reversal line. We accelerated down, so the widening continued, and that is also weighing on the euro dollar. So keep an eye on that one as well if you want extra guidance besides the sheer technical levels on the FX side. That's something that I'm always keeping an eye on, and sometimes it explains moves that may not be completely explainable if you only look at charts on the FX pairs. Oh, and then the metals, the metals. Gold went to test the high of this channel, refused it, but we still were not really sure what was going on there. And then all of a sudden the reversal kicked in. And then what happened on the jobs report and the ISM just killed the whole thing. This is $100 on gold. That's a lot, right? That's over 5%. So it's a big move. I wouldn't rule out if we start to get down to those 18, 35, 45s low to find a bit of support. But what really killed the beast as well, I think, is that on those numbers, the main buyers there have been China, Russia, Turkey, and a couple of those countries as well, and they seem to have stopped buying, and that creates a vacuum, and that's why we create those silly, very very rapid moves. So be careful. First zone of resistance again now, but it's already miles away if you look at it. 1900 again. But as said, if the repricing continues, I wouldn't rule out a move into the 35-45 zone on gold. Silver, the same thing. Where we had the rejection once more of this channel, we are now already trading at the first support zone in the low 22s. So keep an eye on that one, down to 21.90, 22 zone. We're trading 22.40, so in silver it's not that far away. If it holds, that is probably good for perhaps rather the gold-silver ratio, because if the economy is running well, I would suspect silver doing a bit better than gold. So I said I was going to add to my core long-term longs, but I just want to see what happens to the dollar this week. If we end the week going into the next CPI and we're still holding around this zone, I may catch a little knife, because I'm probably going to be, and as I am now, I'm long a bit dollars elsewhere, and I may perhaps add a little bit to my silver just as a potential hedge or so. Right, dollar yen, Ryan already showed. I'm going just to show a couple of interesting ones on the longer term, and I'm going to add the Ichimoku clouds. So what happened here is that we closed the week last week right on the top of the weekly Ichimoku cloud, and we opened above this week. So keep an eye on that one going for the dollar yen. So that comes in at 130.90, the top end of the weekly Ichimoku cloud. As long as we're above, I think this is positively oriented now. So the 55 week is around 132.25, where we are now. That could be another one playing, but just keep this 130.90 in mind for this week. And then on the daily, if we get this support, perhaps we are going back to test the bottom end of the daily cloud. It is coming lower. If we don't get to there today, which is perhaps a bit of an ask, around 133.90, tomorrow it comes in, and the day after it's going to slowly come down to the 133, the figure, which is what we showed already, a relatively interesting resistance. And then coming back on the non-cloud watching, what if we make it back to this rejection zone we had the other weeks, the 134.5? Why not? I mean, it's a big enough zone. We have to clear hurdles. 133, as Ryan also mentioned, 134. The whole 134 to 135 is going to be very, 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 very important if ever we get there. Not saying we will get there, but with the repricing going on of dollar markets, we might just get there if we get a bit more rumors that or confirmations about Amamiya, for instance. This may get there. So, and to come back on this Amamiya and yen stuff, we're seeing that the 10-year JGB yields are still hanging around 0.5. So that's what I was saying. It's not because Amamiya would be elected that those yields are going to crash away. There may be a little bit of reshuffle to be done, perhaps selling a bit of US bonds, buying a bit of Japanese bonds, but the normalization process in Japan has started, and the difference between Amamiya and any other candidate would be that this normalization in the monetary policy in Japan would go faster than when the Amamiya is there. And also, we can't forget, as I've been saying already many times, that the Japanese government has been put stimulus package after stimulus package in place, and that needs to be financed. And if it's a guy like Amamiya coming on, taking over from Kuroda, in Japan, we central bank independence is a kind of it's a word, but I don't know whether we really have to speak about central bank independence there. They will be mindful about government needs to finance all those stimulus packages. So I reckon if they normalize policy, it's going to be slow under Amamiya, and we may go somewhere up to look at this move. This is 2013, right? Even going to 1% is already going to be a big move in Japan. So imagine that over the course of next fiscal year or so, we are going to this 1%. We are still going to be well below other countries' interest rates, and that's why I'm saying that this Amamiya, if he gets elected, is a quite big thing for those who thought the yen was going to strengthen much more this year. I think similar as to the dollar, we need to be doing some rethinking here. Next week may give us a very good indication once the Japanese government or the cabinet will have decided on who the nominees are. A couple of other currencies, euro dollar, yeah, it's happening in this 107.45-75 zone to me. If it gets down there, it gets down below, then as Ryan was saying, why not have a look at the 106? 106 was another line here. It's a bit of a retracement zone as well. I think 106, if you have to correct your dollar moves, 106 is not miles away. But I think once we get there, also with the ECB in mind, I think for the euro dollar that may, and I'm going to take a bit of a gamble there, and I think that may be it. I am a little bit shortish euro dollar, but I think if comes down to 106, I'll be a happy camper to just take profit and perhaps add a bit to other euro crosses long, such as euro sterling, for instance. That is still a candidate for me to hit 90 soon. And as Ryan was saying, for as long as we hold above 89, figure 15, nothing changes here. I thought with the good US data that risk may be doing a little bit better, so I hedged a little more of my call. and I'm looking for perhaps a move back, if I would see it down to mid 88s, to then start to rally again. But for the time being, the market is not even correcting more than 20 points on the euro sterling. So this is still oriented very much to the top side for me. Cable, bit short there as well. Went short last week and covered it, but then at the end of the day on Friday, since we didn't have any bounces at all, and I just sold a tiny bit again, and I added a little bit this morning. Cable, I think we could be on our way back to 118s this week. Why not? But we need to respect this one, 119, 70, 85. Respect it. These multiple fib lines coming in there. So if you get a test just below 120, I have a close look at what's happening. As I said before, it might not go in a straight line, this dollar. But yeah, BOE was they did 50, but they, as I already said, it was again a pretty dovish 50, right? So I'm still a bit negatively oriented in sterling. Euro mix. I've started to trade this a little bit, but just a little bit from the short side again, because my reasoning is that what's good for the US is good for the USMCA countries as well, Canada and Mexico, because we know Mexico is has now increased its manufacturing country for the US again, since they tried to move away from China. And I think what's good for the US will likely be good for Mexico as well. For the time being, risk is getting a bit shot down, so this one is going higher. But really, my not going to say panic level, but my real level of this zone here. If it goes through 2080, I may be wrong, but until then, I'm planning to build this one up again. Also, seeing that the Mexican interest rates are still like 10%, and ECB will never even get close to there. But I was also looking at Mexian, but my levels are a bit far away. So I've started this one. If Mexian comes lower, I'm going to have a look at that as well. And that, yeah, we have to look at the Norwegian kroner. I thought risk would do a little bit better this morning, but it doesn't. So Euro NOK is still very big, and we're still on our way probably to retest those highs here. And the dollar NOK, that one is now retesting the shoulder level of the bigger head and shoulders. If this goes through 1030s, it could accelerate again, and I'm not really ruling it out. I'm going to be looking for any setback. Ideally low 10s, but in current context, I'm not sure we are going to get anywhere close. So perhaps 1016, 1015 would be a bit of a level to try and grab some and look for it to trade higher, keeping an eye on Brent, of course. And that really is it for me. So yeah, I'm positive towards the dollars. I'm not completely negative towards risk for the reasons that I've said. I think the good numbers could be good for risk, and that to me is may also keep this one from completely falling out of bed. So for me, for as long as the S&P is trading above 40.5, I wouldn't really go too short. Of course, if you pick the top with yields going up, the natural correlation is for stocks to come off. But I'm always saying, if the numbers are good, I prefer to be long the currency than to be short the stocks. So yeah, for the time being, I'm not riding this train. I'm going to be a careful watcher of what's happening around 40.5 in the S&P. So that is it for now.
Thank you, mate. I think that picture up of stocks, I think that is a pretty important picture, and something one of our viewers, as Himanshu just said earlier, Does the same thing apply to stocks as what we're seeing in the dollar? I think the correlation is weakening. Stocks aren't collapsing as much as they may have done previously on the data we saw, the good data. It's been a case, good data, sell stocks, bad data, buy stocks. But I think that's weakening. We've broken out the trend lower, potentially with that break of the trend line. You see all those 1, 2, 3, 4 odd highs coming in there. So that move above and holding above that, keeps the balls in shape. We've also made a higher low. You've probably Head and Shoulders mob are probably looking at that one as well. But I wouldn't say stocks have turned around at all. And there's cases, while we're above 40, 50, even 4,000, it keeps the upside movement, the trend in play that we've seen this year. So, maybe the correlation is breaking down now at last. And
if you look at the correlations, for instance, we had go back to the month of January and look what happens to the euro and look what happens to the European stocks in January. And we had this rebalancing thing going on where the market was believing more in the euro catch up versus the rest, and the European data weren't completely falling out of bed, although weak, like all the rest, but weren't completely falling out of bed. So we had this rebalancing act from other markets and indices back into DAX, back into the CAC 40 and things. And to me, we may see a bit of the inverse going on. So yes, if rates go up, stocks will be a bit heavy. They will probably not go to new highs. Sorry, for the month, the 4,200 will be capped. Maybe even the 4050 here may be capped. But if the market needs to rebalance a bit from what they went out of one basket of stocks into another one, you may see those stocks hold a little bit better than what the interest rates would be telling you to do. And I won't be going long. That is for sure. I won't be going long because higher interest rates are de facto a weight on the indices' shoulders. But I'm just cautious because what's good for the very good numbers in the economy, if they continue to do so, then those stocks may hold up. It may be a completely different story next week. If you had an overheated print on the CPI again, then they will go further down. If in turn CPI puts in a gentle slide next week, they may continue to just hold up, right? So this is a bit, correlations are shifting. Let's put it that way.
Yeah, absolutely, mate. Agree with that. Gavin makes a good point on stocks that thinks the earnings need to come down for stocks to go down a lot. Yeah, I agree with that. And earnings haven't been that bad. There's been a few misses, but it's misses of profit. It's not anyone losing money or anyone giving it back. Seeing collapsing revenues or anything like that. So yeah, there's every indication that a soft landing is going to happen in the US. And if the numbers continue like we saw on Friday, they may not even touch down. The economy may pick up and go round again. So, what the Fed does with that is going to need explaining. But as I like to point out, let's not get excited over, 1 month of numbers where we know that it's been softer for the prior few months. These could just be outlier numbers, and as Mike says, it all gets revised lower and reversed next month. So take each day, each month as it comes, each set of data as it comes, and we just trade what we see. And if we start seeing a trend and we start seeing the others picking up, like the ISM manufacturing, the PMIs, all the other data suddenly turning around and shooting higher, then yeah, the Fed may be forced to go into speak about higher heights because they won't want the economy heating up too much. They'll take the growth all day long, but they won't want it heating up too much, or inflation's going to come right back in again and bite them in the arse. Who'd be a central banker, eh? Now, I want to just have a look at a couple of other pairs. So I'm going to nick the screen from his nibs.
Back to you.
Thank you, mate. Dollar Yuan has had a little bit of a breakup. It's put me in I had a buy stop at 80.50, which got triggered late last week, and I'm sitting in it. I'm not overly keen on it, to be honest, because it was a bit of a spike. I have had that order in there for quite some time, and maybe I should have pulled it over on the Friday and just looked at it again. But I wasn't keen on buying down here. I had an idea to buy it down here into 670, 71, but the price action last week, it wasn't looking strong for the dollar, and I was just a bit hesitant to, so I didn't do it. I'm now triggered in a buy stop 80.50. It's trying to hold above this 78, 79 area. So I'm 50-50 on whether this one works out or not. My stop's fairly tight, 76.5. So I'm not giving it that much room. But this is one I'm going to be sitting there with my fishing rod, seeing what happens. If we get a move back up towards, 82s, maybe these highs 83s, then maybe I'll just knock some off just to put some in the bank due to my lack of confidence in this trade. 684 is still the number above, crack above that, and we may be seeing something more. So if this dollar strength is going to continue, that's the area I want to see it above, 684, and then we'll take it from there. Another one I keep knocking on about, I've got an order in dollar Hong Kong. We are inching closer to the top of the band, so I'm offered 7.8495. Those who've been watching the show for a while know I was doing that up here last time, knocking bits off when we got the dips, and I ran it all the way down. Didn't quite get my 676 to get out the whole trade, so I've still got a little pinch on, but I'm happy to play the band yet again up the top here. Again, fairly tight in case of any accidents, 7.8650. If it breaks, anything goes wrong up there. I hope my stop gets pinged rather than the net first print being 790 or something like that. But that's the risk you take. And for those that do not know, the Hong Kong Monetary Authority has the band in place. They will protect it up here and protect it down there and not let the dollar move through, or the Hong Kong dollar move through. Any signal that they might mess around with a band, I'll be out as fast as my fingers can click that button. But until then, they are pretty solid about that. Just a quick look at the data to come this week. Often a quiet week after the NFP week and all that slate of data we had last week. As mentioned, got the RBA coming up. That's to keep an eye on as well. But apart from that, not really an awful lot. Some lower tier data. CPI from Germany on Thursday. That's the delayed stuff, I believe, and we'll probably get the regional numbers, I think, as well. China CPI, PPI might be worth a watch. Thursday, Friday as well. Some GDP data, industrial production from the UK on Friday. CAD jobs might be a bit interesting as well. And I think that's the flash number for the Michigan consumer sentiment on Friday as well. So a few little bits and pieces out to keep us interested. But other than that, a fairly quiet week to go. Obviously, central bankers aside, as mentioned, Powell tomorrow. I think that's we'll call that a day for today. I will give you a forewarning that the show may be a little fast tomorrow because I've got to jump on a train up to London, as mentioned earlier. Yeah. I'm not sure. Are you going to be here for the show, or are you going to be? Well,
I mean, yeah, for half an hour, and then we need to go, right?
Yeah. So it might be a bit of a quick one tomorrow, folks. I'll get you there in advance. We'll rush through the headlines, throw up 2 charts each, and then it'll be adios. Sayonara.
Yeah. Look at what the moves will bring us, and yeah, then we're heading out, right? Yeah,
and we promised to be on time on Wednesday, hangovers or not. So we'll see you. Well, I promise anyway. One of us will be here. We might have to toss a coin for it on the train home, Kay.
You keep your promise. I'll see what I'll do tomorrow. I'm not going to promise anything on Wednesday. All right, folks. Guys, thanks for being with us all the time.
Yeah, thanks a lot, guys and girls. We shall see you tomorrow morning. Have a great day and a great week. Cheers all.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.